Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AMYLYX Pharmaceuticals INC quarterly report. AMYLYX Pharmaceuticals offers a range of businesses and services including development of treatment options for neurodegenerative diseases, treatment options for endocrine conditions, research and development of GLP-1 receptor antagonists, clinical trials for various products, including plus avexitide post-bariatric hypoglycemia and congenital hyperinsulinism, plus AMX35, Wolfram syndrome and progressive supranuclear palsy, plus M-zone 114 amyotrophic lateral sclerosis. These services are focused on the discovery, development, and treatment of various rare diseases. AMYLYX Pharmaceuticals Inc. AMYLX stock price has skyrocketed by 262.4% in the past year, with a 52-week high of $16.96 reached in October 2025. Several key events have contributed to this surge. A successful public offering in September 2025 boosted its cash position by approximately $191 million, extending its funding runway into 2028. Strong third quarter 2025 financial results exceeded analyst expectations, with narrowed net losses and tighter cost controls. Advancements in clinical pipeline, including the Phase 3 Lucidity trial and ALS program, have been met with positive response from analysts, leading to increased price targets. Increased institutional investment, such as Y-Intercept Hong Kong Ltd's new stake, indicates strong confidence in AMYLYX's future prospects. The primary drivers of revenue growth or decline for a company are multifaceted. On one hand, successful development and commercialization of new product candidates such as avexitide, AMX35, and others have contributed to revenue growth. Regulatory approvals for these products have also been a significant factor in driving growth. On the other hand, discontinuation of certain products like RELYVRIO/ALBRIOZA has led to a decline in revenue. Market acceptance by physicians, patients, third-party payers, and others in the medical community is crucial for growth, but competition from major pharmaceutical companies and changes in regulatory requirements have hindered progress. Government-funded healthcare programs have also been a driver of growth, while patent term extensions and market exclusivities can provide temporary protection against generic product launches. However, competitor activity and delays in the regulatory approval process can lead to revenue decline. Overall, a delicate balance between innovation, regulation, and competition determines the trajectory of revenue growth or decline for a company. Net income and profit margins have experienced a decline in recent times. The primary reason for this decrease is the discontinuation of certain products, which has led to a loss of revenue and increased expenses. Additionally, compliance costs, fines, penalties, and potential loss of regulatory approvals are expected to further contribute to the decline. Profit margins have also decreased due to increased expenses and reduced pricing and reimbursement. The company faces stiff competition in its market, which is another factor contributing to the decrease in profit margins. Overall, these factors indicate a challenging financial landscape for the company. The company's financial performance indicates a trend of negative operating cash flow. For both 2025 and 2024, the net cash used in operating activities was substantial, with $95,440,000 in 2025 and $108,639,000 in 2024. This suggests that the company is not generating sufficient positive operating cash flow to cover its expenses, indicating a potential financial strain. The company's financial performance varied across different segments and regions. Notably, avexitide and AMX35 PSB showed positive revenue in both Q3 2024 and Q3 2025, with the latter experiencing significant growth from $4,937,000 to $14,704,000. On the other hand, some segments experienced losses, including avexitide's -$4,886,000 in Q3 2025. AMX35 ALS also saw a decline in revenue from $4,440,000 in Q3 2024 to $1,646,000 in Q3 2025. In terms of regions, the US and EU performed well, while international markets outside these areas struggled. Orphan drugs were another segment that underperformed. The management team is expressing caution about the company's outlook due to various risks and challenges. They highlight regulatory issues, intense competition, patent protection uncertainty, trade secret threats, government policies, and cybersecurity risks as major concerns. Despite these challenges, they are taking proactive steps to address them by continuously evaluating strategic transactions, anticipating future acquisitions, and focusing on integration and compliance. The company's strategy appears to be centered around adapting to market changes and improving business performance through strategic transactions and integration efforts. The company has made several key transactions through acquisitions and divestitures. On the acquisition side, the company has in-licensed products, acquired rights to various technologies, and specifically purchased avexitide, a product candidate in the endocrine and metabolic field. In terms of divestitures, the company has relinquished or licensed its rights to certain product candidates, including avexitide, AMYLYX and M-Zone 114, in markets where it would otherwise pursue development or commercialization itself. This suggests that the company is focusing on specific areas of interest while exiting others. The company has a history of share buybacks. In recent years, it has repurchased significant amounts of its own shares, including 19,714,285 in January 2025 and 20,125,000 in September 2025. However, the company has not paid any dividends to shareholders during the 9 months ended September 30, 2025 and 2024. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory impairment and loss on firm purchase commitments have resulted in significant charges, totaling $118.7 million for the 9 months ended September 30, 2024. Furthermore, potential disruptions in supply of essential items from Europe and Canada pose a risk to the company's operations. Insufficient supply of materials necessary for clinical trials is also a concern. Additionally, cold chain logistics risks may result in loss or damage to product candidates. The volatility in commodity prices, record inflation globally, and disruptions to credit and capital markets have created uncertainty in the supply chain. New tariff policies or trade restrictions could further exacerbate these issues. These concerns highlight the need for careful management of inventory and supply chains to mitigate potential risks. That concludes the financial summary for AMYLYX Pharmaceuticals Inc. Feel free to comment below, and I will be happy to answer them when possible.